Welcome back. Hope you're having a good morning. Well, we've listed all the top stocks for you. Let's get into some fundamental analysis on that. Prakash Diwan joins us to help us out with exactly that. Hi, Prakash. Good morning. Good to see you in as always. Well, going by the global backdrop and what Powell said, IT stocks will be in focus today. And just to remind our viewers that yesterday marked 20 years since TCS's IPO. And I'll tell you what, the IPO price was 850 rupees. The dividend itself is close to around 4,500 rupees. Forget about the stock price appreciation. So that's been one of the big quality names out there. Prakash, what's your view on tech? It could get a leg up today. What's your approach out there? What do you like from the tech space?
Good morning, Nigel. So, you're right. The IT pack has, of course, in anticipation of this rate cut, rate cut being kind of a buzz. But what's going to be interesting now is that there will probably be a little bit of a relook at some of the names that have not done well, because what you're anticipating is a decent change in mindset from companies to start, releasing orders, and which will largely be from Jan onwards, right? So it's not that immediately things are going to change. It's going to take a while for the interest rate cut to kind of get digested and processed. But I would, if specifically answer your question, look at something like Wipro. Now, why I'm saying Wipro? Because Wipro hasn't, been the best in shape in that sense as compared to some of the other bigger names like Infy and all. But where things change is that Wipro has very decent long-term contracts, which it always gets awarded when things look up for the underlying client segment. And if that were to happen with this interest rate cut and it signals a change in that mood, you'll probably see a little bit of that come through, and Wipro gives you that comfort in terms of valuation as well. So I would only look at that. Of course, the mid-cap IT has been doing well and will continue to do well. But there's not much to be made out there, is my sense. You'll probably have a higher delta in the case of Wipro because it's a large business, which is still undervalued.
Prakash, hi, good morning. Good to have you on. So, just to take off from the point that Prashant was making earlier, this week, one big event is going to be this Reliance AGM, right, Thursday, where usually we get, a roadmap, big announcements. I mean, I think it was 2 years back when we got the whole new energy sort of rollout announced by Mr. Mukesh Ambani. The market's been holding its breath on any potential demerger of any of the businesses, but I don't know if it gets it or not. What would you watch out for? And what's your, expectation of the stock itself? In the last 2-3 days, we've got a lot of target price revisions of northwards of 3,000.
Good morning, Subi. So you're right. It's a big piece in the hall right now. My sense is the AGM is going to, of course, not come with very detailed roadmaps and all, but it's going to give a broad direction and possibly timelines, which is what the market will love on the potential demerger of the retail business. The interesting thing is just see the change that's happened on Jio Financial Services, where 49% foreign ownership has been allowed. So what it does is it opens up another piece where capital raise could happen at the right valuation, right time. So, markets will probably start building that in terms of expectation. My sense is the biggest change, the biggest announcement related to the new energy verticals is going to be key. Because all of us are trying to, we know the quantum, we know the broad contours of how the spend is being done or is being done, but it's the timelines and what is it that, is the commercialization is going to look like. So that, I think, in my view, is going to be a big piece. How much are they going to span in terms of the expansion? When is it going to start? So if that happens, then you have the stock starting to re-rate the earnings from that business at some point in time. On the stock, I think, it's definitely undervalued from my perspective. I believe the sum of parts is far bigger and you would still have a 15-20% upside if you were to look at that. And if the market gains this liquidity-driven momentum, I don't see any reason why Reliance will probably not scale up to these recent highs and probably cross that as well. But you've got to be patient. It doesn't move when you expect it to move. It moves along with the market. It makes the market move along with itself. So you'll have to wait, but I definitely feel there's headroom out there.
Prakash, morning. Some of the earlier sort of multi-bagger sectors, you take PSUs, for example, right? I think zero returns since mid-June. You look at defense as a sector, I mean, if they were an index, I think you'd be down from mid-June. Are there, what do you make of this entire space and any opportunities here? Or you think it's just sort of too overdone still, even with the slight sideways or even pullbacks, especially in defense?
Good morning, Prashant. No, you're right. I mean, the erosion in, it's not like, a drastic change yet, but I think it's a soft bleed that's happening in the case of defense PSUs. While there is enough news flow to bolster, the expectation in terms of earnings, all of these are way ahead in terms of anticipation. I mean, the results of whatever new order flow that you're seeing, new capabilities and JVs and all of this is all beyond 27. 26, 27, 27, 28 is ballpark where, things change. So what happens is this period from now till then is as I said last time, is going to make them very vulnerable. Because people might decide, say, hey, if everything's going to happen in 26, 27, why am I buying it right now? I could probably look at it 6 months later. And because there's profit for most people who've entered at decent levels, you will see some sort of profit taking, while new buyers might not want to be so enthusiastic in terms of time. So that's where, the PE multiples are contracting. And that's good for the market because all the exuberance that you had will probably soften without creating some sort of a liquidity overhang from these stocks. So I would believe there's still some time for people to re-enter. The only PSU back that I find extremely promising, and I mentioned this about a week back when we were discussing, is the oil marketing companies. I mean, you very clearly have an IOC at 2.5 lakh crores, 40,000 crores profit available at 6 point whatever odd P, and there's still much more to go. So I think you would rather be in a space which is still government led, still driven by expansion, but you're not paying top dollar for the valuations.
Okay, all right. Prakash, Vivek, my colleague, was just talking about some large trades that took place on Friday. And one notable name is Tata Tech. I recall when it listed, the stock went hammer and tongs, it went through the roof. And from there, it didn't do anything. We had a large trade that took place at around 1,020 rupees on Friday. And from there, the stock showed some traction. Now, this technical overhang is out of the way. The business has plenty of promise. What's your view on the stock?
Interesting stock that you pick, Nigel. Of course, there's a lot of, whisper on the street in terms of who the buyers are. We know the sellers, but in terms of, majorly the buyers. So if, Alpha TC is selling out, people probably can also interpret that as a negative. But my sense is, the market in its wisdom gave it the right price, wherever it went to 1,200 odd, I don't remember, and came back to this 1,000, sub-1,000 levels. Now the stock probably has to perform and start delivering. And the commentary that they have, the tie-ups that they made, the contract with the BMW, there's much more in the offing. Their CEO came and explained quite a few things that are in the pipeline. So my sense, it's a great company, great business that's being, just being shaped to kind of, what you call scale up in terms of a global footprint. But the valuations are not expensive at all, though they might seem more so from what we've seen in other smaller tech companies. This could also start doing well. It'll be lumpy. The news flow will drive the stock to be very lumpy. From 1,100, from 1,000 odd, you'll probably see it go to 1,250 and then rest there for some time. Very similar to Tata Communications, the way it went from 500 to 3 years back to wherever it is today. So I think that's the piece. But definitely, it's very interesting. I would believe it's a great buy. And I've been speaking about this on the technology side as well as a pick. But you'll have to be patient. There's no fireworks in the making as of now, at least.
No fireworks. Speaking of fireworks, Prakash, Trent is finally making its way to the Nifty. And what a journey, what a story, right? I was looking at a longer-term chart. The stock used to be just about 1,500 odd. And that was a level. Yeah, 1,500 was a level not too long ago, July of 2023. And then everything's changed since then, right? So what's your sense? The question is, typically when stocks finally enter the Nifty is when the juice is over in the trade. What's your view on this?
So, just a sec, sorry. So first and foremost, as a matter of disclosure, I will not be able to give you any very clear this thing on the stock view because of the position that I have. But I can only tell you one thing, that this is a space that has seen disruption and still has room to see disruption. The only thing is that, it's very difficult to find larger players. I mean, this name has gone all the way to become so big that it's reserved a seat for itself in the Nifty. But there are smaller names that will start, re-engineering themselves, given the changes that are, very clearly on the anvil on the e-commerce policy, the way the consumer behavior is changing. So I would believe you will see more disruption happen here. on this, of course, this is an event that a lot of people were anticipating and waiting for. So I would love to, wait to see the reaction of the market and once that event is done. So, that's all I can say right now. But yes, it's a great space to fish, even for some smaller names.
Yeah, I'm just correcting the dates. The 22nd of May 2023, so just a little over a year back, the stock was trading at just around 1,500 rupees. And look what happened after that. I mean, just phenomenal stuff on trend, almost closing in on 7,000 now.
Prakash, I wanted to ask you about Ambuja Cements. How do you read that development? Part of the street was a little skeptical that the promoter converts shares at 419 and then offloads some share at around 425 rupees. And all of this in a matter of around 8 to 9 months. But the other part says that we want large cap names. So that's why we view this positively because it's deleveraging the parent, similar to what we saw in Vedanta. Your view on Ambuja Cements?
Extremely positive. What has led to this situation where the promoters could encash is the change they brought about in a sleepy company, starting to work on the internals, especially logistics. There's so much of cost saving that is already visible within its metrics. And this will continue, Nigel. It's you understand the business. When you don't, and in this entire period, you've not actually had very great pricing pass-ons, right? I mean, you still have an opportunity when prices reset themselves post the monsoon season, that things will look up for most large players, especially the ones who have footprints in demanding geography. So I think it's a very wise thing. The business doesn't alter just by this minor dilution by the promoters, and they need, as you rightly said, not just to deleverage. It could kind of give them opportunities to acquire some other businesses as well, and for that the balance sheet also starts kind of getting in a position to have more money coming in for strategic buy. So there's lots that's kind of in the pipeline, I'm sure, and this is just a precursor. I'm quite positive on the underlying business. Forget all the all the headwinds that you have ahead of us in terms of mergers and all. But I think the sheer size and scale of business that they are managing, they're the only ones who will compete with Ultratech, right? I mean, and there's somebody who's at least there to kind of capture markets that Ultratech is not expanding into. So in that way, both of them will grow together, but will grow at a very decent rate.
Prakash, throwing some more index changes at you. This time the FTSE review. Now, a lot of additions to the all-world list. Let's put up the list that I was alluding to earlier as well. Bank of Maharashtra, Bharat Dynamics, Central Bank of India. There's also Cochin Shipyard, by the way. Remember all the volatility on the shipbuilders last week. So Cochin makes it to one of the FTSE indices as Escorts, Kubota, GE, T&D, Hitachi, and many others. We'll just put up the list. Yeah, there we go. The list is there. The 13 stocks getting added to the all-world index and some 40 plus getting added to the all-cap index. This is the all-world list. Any thoughts on any of these names? I mean, a lot of this buzz was already in the market, but in case, I mean, there might be some residual interesting action on fundamentals and anything that you might have looked at from the list.
Absolutely. So I wouldn't really be able to comment on how the market reacts to these changes from a flow perspective. But fundamentally, if you look at one name that's so interesting, and that's Escorts Kubota, why it becomes so important for an Escorts to be part of this list? It's as simple. When ETF money, FI money comes into India, which has just started doing that, you will have, the Japanese parent, the co-parenting or whatever, one of the parents is Japanese. Escorts is in the space which a lot of FIs like. It has scale, and it hasn't done as well as, let's say, M&M on certain counts. So I would believe that's the name that will probably benefit, maybe not immediately, as I said, but on a fundamental basis, as change happens, sales pick up, margins improve, new launches happen. So that's a name that could be interesting. Some of them I really don't understand. Bank of Maharashtra, for instance, how will things alter? But the FTSE index is followed by a lot of European FIs, and for them, this could make the grade. So I would only look at one of those names. As I said, Escorts is probably the only one that stands out.